All right, welcome to the weekend video. This is Enda here from bullwebs.org, and obviously, if you know this channel, you know that I take a look at the markets through an Elliott wave perspective. So, if that's what you like, hang around, and I'm going to go through as much as I can today, and we'll try and keep it around half an hour. It's been a few weeks. Life has been on top of me. I just didn't get to record a weekend video, but I'm back. So let's make the best of it, I suppose. I'm going to start with the Dow this week. Why the Dow? I suppose it's the longest one I've ever. This is the first market that I started uh, doing videos about and started my website on, basically. It's the one I've followed for the longest, so it's the one that I think is most nailed down. So this is the weekly chart in the Dow. No, I don't usually go to the weekly chart, but I'm going to start out and I'm going to work my way in here. Maybe I'll only do 2 or 3 markets today. We'll see. But I want to show you the pattern that's working here, why I made the decisions that I made earlier on in last year, this year. But the resounding, the overwhelming, let's say, evidence, I think, no matter what you say about the everlasting perpetual top, the overwhelming evidence points to something that should end abruptly. And I'll go into the larger pattern and I'll run you through it. Starting now, stop talking and just start. Okay, so here we have the 2009 low. Oh, what a glorious low that was back in 2009. 6,480 or something like that. So I think we have 5 waves up off that low complete. So that was a wave 4. You see there, wave 4 in black. We have a 5th wave rally complete. It's done. We have a solid pattern with an extension in a 3rd wave. An expanded flat 4th wave correction, which I'll come to later, I suppose, is a good model for what's going on right now, but an expanded flat 4th wave correction, which encompassed the COVID crash. Excuse me, that 3rd wave, performed, I think it was 260% of wave 1, or it extended to about 260% of wave 1. A nice Fibonacci, relationship there. The ABC pattern expanded flat correction bottomed at the highs of the previous internal 3rd and 4th wave. So we have this shoulder built here around 2015. The crash came, hit that previous 4th wave low area, and rallied off there again. Now, the rally into, let's say, off the 2020 low into the 2021, early 22 highs, late 21 highs, is a solid 5-wave pattern in itself. I'll go down to the daily to show you that. And that completes the larger 5-wave pattern up in wave 5 of 3. Now, in 2022, we had a decline. You wouldn't call it a crash, to be quite honest, but it was a significant decline, and it was enough to raise the prospect of a finally an impulsive move coming off the high to begin this large 4th wave down. So you can see here we have a wave 5 of 3 in orange here complete. That's a very high degree wave 3, and we have a 4th wave staring us in the face. This 4th wave decline is projected to the previous 4th wave low at 1 degree lower, at 1 lesser degree. So we have the previous 4th wave low at 1 lesser degree here in black. That's the 2009 low. So that's, about 6,500. Do the math. That's what, an 85% decline or something. So we get if that happens, you can sayonara, kiss goodbye to the current economy, the current lifestyle that we have, the current, let's say, it's bubbling geopolitical undertones right now, but things will get very explosive down here. You're talking, World War type of thing. If that hasn't already started, we'll see. Anyway, off the let's say 2021 high, this is the pattern that I'm grappling with in general every day. Okay, so the initial decline is a wave A. You can view that in a couple of different ways. The internal setup here is probably, it's 3 waves down, but it's probably a leading wedge, wave A, retracement, wave B, and then final decline into wave C. We'll parse that now in the daily in a minute. But we have what I'm, the thumbnail on this video is 3 waves up. And that's what we're dealing with right here. 3 waves up. It's a pretty standard 3-wave pattern higher. And that's what I'm going to go into right now. We'll go down to the daily chart and I'll show you where we are. I think we have wave A done. So we have a leading wedge at wave A down in A. We have 3 waves up in wave B. And then we have a 5-wave decline in wave C. So it's a combination wave of sorts. 3 waves down in wave A. You can see the trend channel was nicely filled at the wave C low. And then we had a explosive rally actually off that in late 2022. So most of 23 just went sideways. We had like the wave A top came in at the middle of December 2022, and then we basically went sideways to down until October 2023. So call it early November 2023. So we had almost a year of basically nothing. 11 and a half months or 11 months of sideways action. Always hindsight is 2020. You can see the pattern here pretty well developed. At that time, I was looking at a possible 3 waves up into this, what would I say, the August highs, the July-August highs of 2023. That was wave A up, 3 wave down in wave B, and then there was an ending diagonal pattern wave C. It was a reasonable interpretation, and it did lead. You can see that kind of wedge that I was kind of looking at, that I was working with at the time. So that was ABC up, and that was the second wave that I was looking at. You can see that the decline off that was 5 waves, 5 internal waves. Now there was a kind of a small crossover between the wave 1 and wave 4 low, but that just classified it as a wedge, so it would be a leading wedge. And that was what I thought was wave 1 down of a larger wave 3. So what happened off then? We had the October lows of 2023, and now we're dealing with, well, it was the end of October, wasn't it? 30th of October was the kind of the low. So we had November, December, and January. So we had 3 months of skyrocketing. And that skyrocketing rally, which broke the previous 2 patterns, has now ended up at a new all-time high. However much I didn't want that to happen, it actually happened. And of course, right now, we have the resurgence of the speculative economy, the speculative mindset, probably at all-time highs also. The mindset that nothing ever goes down for long. You just buy it and off to the races, and you'll make money forever, paper money forever. Counting inserts or counting notations which make you richer. That's not reality. I don't know what the dividend yield is right now, but that's, stock market is and should be the dividend yield. I don't know what we're at right now. I haven't looked at it in a while, but new all-time highs usually suggest, new all-time lows in dividend yields, but maybe, we're quite low anyway, historically speaking. I think major lows, we're talking about 15 or 16% dividend yields, or even higher. But we're nowhere near that right now. Major highs usually come at around what, 1, 2, 3% dividend yields. I bet we're probably down around there somewhere now. But of course, when market rallies, when the price rallies, people expect all the return in the price. So your investment return comes from the price, rather than the utility value or the productive value or or the dividend spin-off. The actual dividend is usually productive value. The profit made from production. So you can look at that as your dividend yield, your profit made from production. So when people simply concentrate on price, they forget about actual production and actual return, because the return in their mindset or in the market's mindset is coming from the price. Except one problem with that is you can't solidify that return until you sell, so then you no longer own. Therefore, the asset never produced anything for you. In that sense, you relinquish control over that asset. Imagine if you owned a company and the only time you ever got paid was when you sold the company. I don't know. Like imagine if you owned land and the only time you ever made any income off that land is when you sold the land. Just it's if you bought a car and the only time you ever got any value out of that car was when you sold it again. It just doesn't make sense. The only arena that mindset seems to make sense is in speculation, in the speculative arena. And here we are in the speculative arena. Now, the initial decline in wave A into the October 2022 lows was and now has been retraced and some to new all-time highs. But this new all-time high has come in the guise of a three-wave pattern. And it's very obviously a three-wave pattern. I'm not sure we've ever seen a more obvious three-wave pattern. This is, to me, I think, at this, I know, call me what you want, but to me, this, looks like the mother of all three-wave rallies. And the fact that we're sitting at new all-time highs probably does qualify it as the mother of all three-wave rally. I hope I'm still recording. I think I am. Okay. So if we've got this ABC rally to a new all-time high, well, then this has to be a B wave. It has to be a B wave high. There is no other interpretation here that actually fits. And the fact that this is a B wave high suggests that let's get a Fibonacci grid on that. The fact that this is a B wave high suggests and requires that at the very least the whole rally in wave B must be retraced in wave C. So we must see a break of 28,000 in wave C, which will complete wave A. Things never stop, right at where you think they're going to stop, just like me and this rally to a new all-time high. It hasn't stopped. It didn't stop where I thought it was going to stop, but now it is coming to a point where it's so glaringly obvious from my point of view that this is a three-wave rally to a new high, that it has to be a B wave. I don't see any other interpretation that actually holds water, to me anyway. So if this is a B wave and we have filled the trend channel, we've come up, wave A, let's get a Fibonacci, 100% Fibonacci grid on that. Size of wave A and the current highs is an exact match of, if you were to take a wave A equals wave C, internally in this three-wave pattern, wave that projection gives you 38,715, and today, this morning, the futures are trading at what? Let's get a read. 38,750, more or less. So we are here. This is it. This is the get off the bus. We're home. The pattern has reached its zenith, and you can see even with internally here on the daily chart, there's a serious divergence going on here right now. Even though we're sitting at new all-time highs today, we are dangerously diverged at this point. Okay, what comes next? Well, let's first take, if wave A was the 100% decline and wave B is the extended expanded flat correction B wave high, wave C should at least break the wave A low, so that gives us a target for wave C at 28,600. And that wave C of B took 3 months and a bit, 3 months and change to rally to a new all-time high. Wave A of this initial decline took 8 months, 8.5 months to complete. So from here into, let's say, October, again, October seems to be a very important time in the markets, a pivot point in the market. So we had the October high of wave A, we had the October low more or less of wave B, we had the October low of wave A, we had, that was so we have September, let's say the wave A high here came in, no, that was December. So we have the late September, October low of wave A. We had the October low, late October low of wave B here. And now here we are sitting at wave C, projecting down into wave C, which could well take 8.5 months or something, just like wave A there. 5 waves down, 8.5 months, brings us to October again. So if we have a minimum target, that would be 28,600. Not a maximum target, but a standard, let's say wave A equals wave C equals 162% of wave A. That gives us a target of about 25,300, 25,300. If we have 261%, that gives us about 17,000 in wave C. I don't think we get there. If we go out to the weekly chart, well, maybe, if you look, just look at the pattern, nothing else. If you don't want to, like, I'm gonna discard my own biases here in terms of what I think is reasonable, but look at what the pattern can do. If we go to the 2019 high and the COVID lows, which was an expanded flat correction as well. Also, if we go in there, if we take a Fibonacci grid and we go off the low of early January 2019 and we extend it to the previous high, and that gives us the size of wave A decline. So that gives us the wave A decline, and we extend that off the wave B high of wave 4. So that's the wave B of 4 high, and it probably declined about 200%. It didn't go as far as 262. It was between 160 and 260. So about 205, 210% of wave C here reached about 205 or 210% of wave A. So if we take that same model here and we go to our daily chart here and it's the same model. It's like an expanded flat correction, and wave C will come quite sharply, maybe even quicker than the wave A decline. We're talking about into October of this year. If we get let's say a 200% decline, and we take a copy of that. Forgive me now. 200% decline gives us a target at about 21, let's say 22,000. That's a 200% decline in wave C in relation to wave A. So minimum target 28,600. Maybe we call that about a maximum target of 22,000. Wide enough range. Pick the middle there. About 25,000 would be standard enough relationship between wave C and wave A. So 25,000. That is 13,000 points from here. 30,700 points from here. If we go, what's 13,700 over 38,700? So it's about 40% decline. Actually, I'm going to do that while you're watching. 13,700 over 38,700 is equal to about 35%. So we got 36% decline in wave C alone. So if that happens, you are talking major, most likely catastrophic disruption to both the banking system, the overarching system of, or the entrenched system of speculation which exists right now. That'll disappear, and yes, into the economy as well. So probably devastation. That wave C decline will be devastating. What comes after that in wave B will be just a breather. This B wave here, maybe a year of a correction higher, will be a breather before the final dissolution of speculation will come in wave C of 4. And we're talking out into 2030 probably. But for the next, the rest of this year and into next year, into early next year. So for the next 12 months, you should be geared for this C wave decline. This is what I think is on the cards right now. I know the previous patterns that I was working with did not pan out. I was working with a standard model of 5 waves decline in wave A or 3 wave decline in wave A, depending on how the overall pattern here. I'm still going with 3 waves down in wave A, but it's an expanded flat, so this is an irregular. Already, it's an irregular one. Irregular or not, it still meets the criteria, and the pattern will play out. At the very least, we get down to about 28,000 in wave C, and then if that is the low of wave C, then we take a breather after that. It'll probably grind sideways to higher for a year at that point. But we are so highly leveraged right now that a decline like that, even a C wave decline like that, it'll send bankruptcy waves throughout the world, basically. Now, how does the S&P fare in this model? The S&P, there is an interpretation here which suggests that this could be wave 5 of the larger pattern. I have my own, I have my own, let's say, biases here. I'm going to stick with the idea that this is an expanded flat correction here as well. but I can't deny, that this could be a five-wave pattern. It all depends on how you view the initial wave one here, because there is a crossover, between. If this is 5 waves up, this could be right. It could be an ending diagonal. Like, well, you would prefer to have 3 waves internally there, but where you classify your wave one top kind of the wave four low here. If this is a 5-wave pattern, I'm not talking about my pattern here. If this is a 5-wave pattern here, then this wave four low, should hang above the wave one high. And in my book, that didn't happen. So I am kind of running with the same idea as the Dow. Now, this is a daily chart here, and you can see that we have filled a trend channel here in the S&P also. So wave A in the S&P was extended, and wave B more or less traced out the exact same pattern as the Dow. So we had an initial decline in wave A, 3 waves up in wave B, and then 1, 2, 3, 4, 5 down in wave C. So we have an ABC pattern, solid pattern in place here. We're sitting at new all-time highs. We have a significant divergence again on the daily. We have extreme optimism. So momentum has given up. We have extreme optimism. We have a fulfilled pattern. We have a trend channel that is filled. We have a throw over the top. We have a new all-time high. We have wave B in position. What comes next should be wave C. So this is the weekly chart here. Wave C, excuse me, just like the Dow, wave C, if you go to the weekly there as well, you can see the B wave top didn't meet the previous 5th wave in terms of momentum. So this B wave top is most likely still classified or fits within the realm of a B wave. In my book, we're still at extremes though. It's amazing the extremes we've reached. But we are humans, and we have a tendency to be overcommitted at the wrong time. Okay, if you've ever twisted your knee or broken your ankle, you know all about dislocated a knee or an ankle or anything like that. You know all about being overextended at the wrong time. Okay, so here is the 4-hour count for the S&P, and you can see we have an internal pattern which traces up 5 waves up. On the hourly count, we have 5 waves up within wave 5 green. We have 5 waves up, I think, within wave 5 blue, and we have 5 waves up within wave 5 pink. So, the how would you say, all the little way markers, all the little waypoints have been more or less met at this point. I don't know how much higher this will go, but let's try and make some stab at what we might expect in wave C. So again, let's take the height of the wave A decline at 100% and extend it off, let's say something close to where we are in this pattern. We're already in a throw over in this channel, so the high should be soon enough, if not today or next week. So somewhere soon, the minimum decline for wave C should be a break at 34.90. Again, that wave A low around 34.90. That should be the minimum target for wave C. If we go down, 162% extension of wave A will bring us to 29, call it 2900. So that would be, a 1900 point decline from here, from the current top, 1900 points. So again, 1900 over, sorry, We're sitting at 5,000 now. 5,000, 2,900, 2,100 over 5,000. That gives us a 2,100 over 5,000. Gives us a 42% decline. And that is to complete wave C of wave A. Now let's get this marked up. So that's wave C of A. Again, I'll reiterate, well, I don't have to reiterate what I just said for the Dow. If that happens, and at this point, it's more likely to happen than not, you know, given the situation that is actually in place right now. So we're looking at a 40% decline to complete wave C of A. And if, you know, well, you know, you can spend a little time thinking about what that'll actually do to the world economy and our own personal economies. You know, you're talking about mass unemployment, serious layoffs. You know, serious layoffs. 2009 style, 2010, 2011, probably into about 2013 or 14 in Ireland, about 4 or 5 years. You know, it was an economic depression basically. So we can expect that sort of thing to happen when wave C does actually finally bottom. It'll be a wipeout. It'll be a serious wipeout because you know the what people are basing their wealth on right now and their expected future incomes on right now is extended, overinflated expectations, historically overinflated expectations, and we tend to do that at the very wrong time. So what happens when the market readjusts, you know, when you get this kind of cycle of bankruptcy and cycle of cleansing within the market, then people radically readjust what they expect. You know, wage deflation, personal income deflation, personal wealth gets radically readjusted to the downside. So, you know, your house is no longer your asset; it's your liability again. And you know, far be it from me to suggest anything. You know, I was a builder. You know, I was in the construction industry for a long time. Far be it from me to dissuade or to, you know, poo-poo the industry. But a building is only an asset insofar as it creates something extra, some stream of income from it. The value of the building itself is not particularly, you know, obviously you can apply a value to it, but it doesn't. The exchange price of the building, be it your house or your block of flats or something like that, the exchange price is not where the value lies. The value lies in the income it can generate. You know, a house that you live in doesn't generate income, you know, but it does offer you utility value, and the price of that house should be around the utility value that it gives you. You know, plus some. There is advantages to being, you know, living in certain places and to having certain amenities in your house. Okay, but you know what I'm talking about here. This will get radically readjusted, and your house will no longer be worth what you think it's worth. You know, you can't brag in the pub when you go and, you know, tell people you've just met that you're a millionaire because your house down the road sold for $1 million. Okay, I'm not gonna rabbit on anymore about that. I may even have gone far enough. How long have I done here? I've probably done what? I don't even know how much I've actually recorded at the moment. Maybe I'll just stick to the actual stock market on this one. And I will just tell you that this pattern's complete, and what comes next won't be pretty. Okay, I'll give a quick run through on, let's say, gold. So where do we stand in gold at the moment? This week I'm kind of been looking at over the last week or two, I've been looking at a 1-2 pattern down off a previous 1-2 pattern. So it's a 1-2, 1-2 to the downside. I'm kind of suggesting this week that we get up to about, this again, the Fibonacci retracement, 62% retracement, about 2045 to complete this wave 2. And then next week I'll be looking for wave 3 of 3 to the downside. Crude oil, I think we have more or less proved the pattern this week. This correction that we were working on over the last few weeks. We go back to the previous video. We were talking about a fourth wave correction high, and the action that came after that was pretty complementary to that that idea. The very top end invalidation level for wave 4 here lay at 80.70. So that was wave 1 low. So we've got 1, 2, 3, 4, and we're heading down in wave 5. So wave 5 of wave 1. There's a couple of ways you can view that, but the current pattern suggests wave 5 of wave 1 coming our way, and we're underway in that one right now. So we've got wave 1 down, wave 2 up, and we should head down into wave 3. Now, the alternate pattern here already views wave 1 as complete, and this was wave 2, so we should be heading into wave 3 of the larger pattern. So either we are heading down into wave 5 of 1, or we're heading down into wave 1 of 3. Lower for longer, maybe, for the moment. Unless something drastic changes here, this pattern has been working quite well. We had a full retracement of the previous B wave, so that previous B wave of the triangle came in at about 72.50. We had a full retracement of that previous, C wave rally in wave 1. So the last week or so, we've been working on this rally higher, this counter trend rally higher in wave 2. We've got a lower high at the moment. I don't know if wave 2 is done just yet. The internal pattern here is a little bit, I can view it in a couple of different ways. So we're still kind of allowing this to play out, but I suspect somewhere between where we are right now and the 78% retracement up at 750 should top out wave 2, and we should head lower into wave 3 then. But so far so good. If you go back into the previous video, we were probably hovering around the highs of wave 4. We've just created a throwover, or we were close to it. That was the 26th. Was it last week? The week before last. And we came down quite heavy off that. So that was the pattern worked. 3 waves up. Actually, I think that might be worth talking about for a second. This is how a correction higher in 3 waves can get resolved quite quickly. So this is what we're talking about in the stock market. Three waves up. This is a 4th wave, so 3 waves up in wave 4 got resolved quite quickly to the downside. In a fraction of the time it took. Probably 20% of the time it took to actually trace out this pattern in wave 4. So it's something worth thinking about. As for crude oil, I think we are beginning wave 5 down. Let's go to gold. We do like the old yellow metal here. We have a wave C of 2 is the pattern that I'm working with here. So we have wave A down, wave B up, and then we should be heading down into wave C. So the idea is that we have wave 1 down, wave 2 down, and we're completing a series of 1-2s to begin wave 3 down. The high at wave 2, so 2089, must hold, and we should break 1972 to confirm this pattern. But if we get a decline back below 2000 again, then we are looking at confirmation of wave 3 of 3 of C. So that's the idea here. The dollar, we'll go dollar yen. Dollar yen working out quite well at the moment. We have this wave 1 high, wave 2 low, an explosive rally up into to begin wave 3. I don't think I think we're going to get a second wave decline here. You can see that I don't think we're going to continue higher in wave 3 of 5 just yet. I think we have probably wave 1 of 3 done, and we should head lower into wave 2 pretty soon. So next week I'm looking for 3 waves down in wave 2 to about 147 or 147.50 maybe, or somewhere like that. If we go to the euro dollar, so euro dollar still heading lower in wave C. The pattern has been quite sluggish at the moment, so I'm going to have to keep this in mind next week. So far, whatever correction has happened higher this week has been very, it's been corrective in nature. I'm looking at this as again a series of 1-2s. So we had 1-2 in blue, 1-2 in pink, and maybe 1-2 in black done, and then extension lower in wave 3, wave 4, and wave 5 should head lower again next week. So I'm looking for that 108.12 level to hold at wave 1 in black here, and we should head lower into wave 5. So if that breaks, then I think this would deserve a rethink on the pattern wise. But so far we've been working according to plan. We'll see how it goes today. I think that's it actually. I always end my video presentation of bad news with the good news of salvation. So you may want to protect your wealth right now, but this wealth that we have in this world is temporary, passing, shall fade away, and we will all end up lying in a box. Our disanimated bodies will be lying in a box, but our animated soul itself has an eternity to live. And that's the lie that this world would like to teach you, that the physical world is all it is, and YOLO and all that, and you only live once, and go do it now, today, and grasp today. I hate what this world has built for people. It's just lies and deception. This world doesn't believe in longer term. This world believes only in today, and you've got to do what is good for you today, and everyone else be damned type of thing. But this world is not just today. This world, your existence is not just today. Your existence is not just physical. Your existence is spiritual. The very fact that you have a conscience suggests on the outside that physicality is not. It's not definitely not what we think it is, but it's not the only thing that there is. Otherwise, we would be completely emotionless, completely ruthless in our living out of our own life. Now, maybe many people do just do that, but there is an innate belief inside you, or an innate animation inside you that suggests that something bigger is going on here. And I'm here to tell you that something bigger is going on. And you are living out, a saga. Excuse me. You are living out the creation saga. And there is a creator. Just look around you. Have you ever calculated the odds that this planet actually exists? You can actually go and look that up. The odds that this planet, this environment that we live in actually exists. It's impossible. On top of that, lay on top of it that we have a body that swings around us at a equidistant cycle called the moon, and it's close enough to us that it actually blocks out the light source once in a while. The very fact that that happens is nigh on impossible. The very fact that you have a breath in your body is impossible. The very fact that you have miniature code running in your body that creates the physical body that we have. Impossible. The very fact that cells actually are animated is impossible. The list goes on, but just add all them up together and you should begin to understand that something else is going on here. It's not just our physical existence. We are created. We are created by an all-knowing, all-loving God, the God that created outside of himself. And we are created with individual wills, free individual wills. And I can prove that to you in 2 seconds. God created you with a free individual will because God is love. Because love comes from free will. The free will that God exercised to create us is the same free will that he wants us to recognize, to love the God that created him. If God created you without free will, then we would not be able to not love God. But the very fact that so much of us decide to turn away from our Creator is the very proof that you have a free will, because you were given free will to do that. Now, there is eternal consequences for that. But I'm getting to the point of the eternal consequences. We live in a fallen world now because of our free will, because we chose to turn away from God. Our progenitors chose their free will over God's will. They chose to decide what is, to be the deciders, the arbitrators between good and evil. And that's what they chose. And we're left with evil. And we live in an evil world. And we live with the burden of our own sin and our own, enmity with God. And there's a price to pay for that. But the price to pay for it is eternal separation from God. But for the grace of God in Jesus Christ, who came to live the perfect life and offer his perfect life for your life and your eternity. And he ransomed you to God, paid for your sin. But again, the free will problem comes in. God grants you free will, so you must accept it. You can't just leave a gift on the table and force it into someone's hands. They have to accept it. So the gift is there for you to accept. And Jesus said, take upon you my yoke. So because my yoke is easy and my burden is light. So Jesus said his burden, that he, not the law lays a massive burden upon people, but his burden that he would lay upon you is easy. And it's as easy as accepting him and accepting what he has done for you. So that's what I leave with you today. We've spoken a lot about the temporal existence and our valuation of that. But what value do you put on your eternal existence? That is worth contemplating. Okay, until next week. That's been a long video. It's been a while, so I suppose we'll do a long video. Until next week, we'll see you back here. If you want to go and check out bowlife.org, join the website, you'll see me every night. Okay. God bless. Until next time. Bye-bye.